DM Association with 2 decades of experience in risk management, bank regulation, and finance, most recently at the Federal Deposit Insurance Corporation. Julien is also, we're proud to say, an alum of American University. Julien?
Yes, Bob. Thank you so much. And good morning to everybody. I hope everyone is staying safe and well during these continued trying times. Thank you, Bob, for the kind introduction, as well as thank you to GBBC and of course the American University for organizing this event. Not only do I feel welcomed, Bob, like you mentioned, as welcome as can be when you're behind a screen like this, but as a double eagle is what we call folks that graduated twice from American University, I'm in fact really at home. With both Tamika and Sandra so eloquently discussing the power of blockchain, some of the use cases, some of the solutions, I thought it'd be beneficial to spend just a few minutes to talk about 2020, the digital space, the fintech space, reflect on 2020, and also give you a project update on DM, formerly known as Libra. And because I'm a fan of Prince, the artist, every time I say DM, formerly known as Libra, I think of the artist formerly known as Prince when he decided to change his name to an icon. 2020 was a seminal year for the world and for how essential technology is in keeping the gears of the economy running. In all aspects of our lives, during this unprecedented global crisis, the role of technology in our households, the role of technology in businesses, and the role of technology in the government for its continuity was and remains to today absolutely essential. This is true in perhaps all aspects of our lives, except perhaps one, the way we transfer value. Our ability to use cash, walk into a bank, transact normally with bank tellers has been restricted. The pandemic has underscored the need for digital solutions to exist. Think of telephony, and if telephony was still fixed over the past year, we'd have billions of individuals unable to communicate with one another. So imagine for 1 second going through this pandemic and not being able to see or let alone speak to their loved ones, either across the world or across the street. So there's a misconception that money is already digital of how it flows, whether it's from a central bank to regional banks or how we send money internationally in the form of remittances. What we have in place today is a digital process of counting money. Deposits held in commercial banks can be moved electronically using our check cards and debit cards and credit cards, but it's still the liability of private banks who have to retain and maintain a certain amount of deposits as well as certain reserves according to the Basel requirements. So really, it's showing us that private money itself is probably an innovation is probably as old as money. So it's clear that the direction of travel is digital, but I don't think it's at the detriment of the current models. If you look back at history, and if history is any indicator of large-scale changes, then the sentiment that we have seen and that we felt today has been seen in the past. If you think of the transition from mostly cash to the ability to write checks, from the transition from checks to plastic credit cards, and now from credit cards to digital wallets. So the case for efficiency and reduced friction and user empowerment has really been the promise of fintech, was really laid bare last year. You saw governments grapple with how to get direct relief to their neediest citizens, while they also tried to target economy-wide interventions to protect and preserve the engines of commerce and the economies amidst a global lockdown, unprecedented. So in this environment, some of the contactless payment solutions managed to reduce the cost and just make it more efficient to move value without sacrificing trust and compliance that we have in the system. As this pandemic, although there is light at the end of the tunnel with a couple vaccines and Johnson & Johnson's vaccines coming out imminently, COVID continues to wreak havoc globally. Although I remain a glass half full and optimist type of individual, I'm hoping that we will return to a new normal this year. There are, however, some items that are worth keeping as we reflect on the year where fintech innovation, and particularly why this event is so important, the use of blockchain as core building block of this user-directed payments, I think are here to stay. So a key pillar in broadening the base of participation in these efforts is the growing wave of regulatory clarity. Following this keynote, we have a panel on regulation and stablecoins where we'll dive a little bit deeper into the treatment of these assets and how we should promote responsible, principled innovation. Chief among these are efforts on both sides of the Atlantic, as well as around the world, to address the legal classification of what is a digital asset, while at the same time delineating some of the minimum expectations when it comes to combating illicit finance, illicit activities in that particular space. Some of the encouraging market developments that we've seen over the past years are starting to bridge the gap into the real economy. So if 2020 was the year that the change happened, I think 2021 is the year that it becomes lasting, where some of these development not only gain some of the regulatory clarity that has been lacking, but once we follow a same risk, same rules, technology neutral approach to oversight, I think we'll have clarity. So now let me shift gears to the DM project, the Libra project. So just for a little bit of context and background, I started with the project just 3 months after its initial start. And I was a lucky employee number 7, which is also my lucky number. But I think we should start with the human aspect that really has only accelerated itself over the course of this pandemic. And I think through the human aspect, it'll reveal where there's a common cause, where private sector innovation and the future of payments should be welcomed. Sandra Rowe previously talked about private partner partnership, and I think private public partnership. And I think we are at one of those moments in history where private public partnership makes the most sense. So we start in a world with 1.7 billion people who do not have access to the modern financial system. We have approximately the same number of individuals that are underbanked. Underbanked meaning that they lack traditional banking. Therefore, they leverage alternative financial services such as check cashing kiosks, payday loans, rent-a-centers, and these type of things. So through a policy of de-risking over the past decades, we've had a high price exacted on the people that can afford it the least. Now, here's the opportunity. More than half of the unbanked population have an internet-ready mobile phone. So if a mobile phone can become a regulated payment endpoint, it's the start of economic mobility for billions of people. Most of the money in circulation today is actually privately issued money, whether it's in the form of the two-tier banking system, through fractional banking, through lending, credit, and instruments. They're in effect a result of private sector innovation and private sector participation. So what we're seeing today is digitizing the model of exchange that has historically been analog. And the way it should be done is through a technology neutral, principled, and activity-based pathway. What we have at our fingertips today that we didn't a little over a decade ago are solutions and cutting-edge technologies like blockchain that can help solve for these challenges. But blockchain doesn't solve for everything, or the DM project doesn't solve for everything. We need more. We need to ensure that individuals have connectivity. We need to ensure that we have the internet, and we have to ensure that we have global digital identities. In an environment when you have these 3-4 aspects come together, we really start to move the needle from what has historically been abstract to concrete. The DM project represents one aspect of being able to move that needle. What I saw personally in this project, and what got me so excited and out of a decades long at the FDIC, the US regulator that regulates approximately 5,000 banks, was I saw a solution to some of the challenges that really I've been racking my brain about for many, many, many years. And that is, how do you bring any individual in the modern financial economy through technology while doing it in a regulated and legal way? So digital currencies offer, I think, one more solution. I call it user optionality that can help do a few things. One, Tamika Tillman this morning talked about the United Nations Sustainable Development Goals. So the UN SDGs have goal number 10, I believe, that talks about inequalities. Over the past, their goal, the SDG number 10 goal, is one of the sub goals within SDG 10 is lowering remittance costs to 3% over the next decade, and also eliminating any type of remittance corridors that have costs that are higher of 5%. Just a few months ago, the World Bank came out with its remittance averages. And in Q1 of 2019, to give you some perspective, it was at 7% average cost of sending money internationally. Just 2 months ago, that dropped to 6.8%. To give you a little more context, 10 years ago, it was at 9%. Now, the issue is not just that the cost of remittances have gone down just 2% in a decade, but is that there are corridors that are still as high as 30%. So without large-scale innovation and progress in this particular sector, I don't think that goal will be reached by 2030. Another update on the project: about 7-8 weeks ago, and it is the joke I came out with, formerly known as Prince. In marking the next step in the evolution of the project, we renamed from Libra to Diem. Diem, of course, is Latin for day, carpe diem, seize the day. And what we were hoping to do is signal that it is a new day for the project. We've broadened our vision to enable universal access to financial services. And really, one of the fanfares that we received over the past 18, 19 months of me doing this job, the first 8 months being on airplanes, circumventing the globe, what I have to show for it, except for the long gray hair, a few more pounds, and a lot of air miles that I can't use, is that our intent all along was to complement and extend fiat currencies and not to compete with them. So digital payment system like the one that we're building would complement the current system in the following ways. One, it adds greater optionality for individuals while reducing the cost of financial inclusion to support this universal access to financial services. How do we do this? Well, the reality of a project is that it is open source and it is inoperable. If you think about the current world of financial services, they have siloed solutions, which is why talking to one another or sending money to one another is so expensive. There are two big ways that a project is meant to advance the market. One, hopefully, it'll pull more people into the modern financial economy. And second, it'll flatten the entry barrier into the fintech world. With open source, individuals such as yourselves, if there are computer science majors in the room today, you could build on the network over time. So having spent half of my childhood in Switzerland, I have to give you guys a train analogy on where the project currently stands. So we have 3 trains that need to arrive at the station. The technology needs to be ready. That includes the DM blockchain. The organizational readiness needs to be there for us to launch. And third, we need regulatory approvals from our Swiss regulator called FINMA. The technology is looking great. Organizationally, we've hired a world-class C-suite executives over the past 6 to 8 months. So I believe we're ready. And the regulatory approval, we've applied for a payment system license from FINMA last year in April. Therefore, we're hoping to hear some good news over the next few weeks and months. So with that, I just wanted to thank you for your time this morning. I look forward to a continuation of the program with our panel on stablecoins coming up. And Bob, I think I'm just giving it back to you.